Good morning, good afternoon, or good evening to you, wherever you are in the world. Thank you so much for joining our AMA. I'm your host, Liam. I'm the client manager here at CryptoTaxAudit. And I'm very grateful to be joined by the president and founder, Mr. Clinton Donnelly. Clinton, how are you doing?
I'm doing great, Liam. Glad to be here. It's to be talking about the crypto taxes at the end of this year. But, this has been a tough year for a lot of traders. A lot of people just call me up with sad stories.
Yeah, for sure. When we spoke last year, it was in Q1. So we had just come off the euphoria of the bull run. Everyone was making money. Everyone was ringing us up. How do we report all these gains that we made? How do we avoid an IRS audit? I think tonight's discussion is going to be a little bit different. Do you think major regulations will occur in 2023, declaring most of crypto as securities? Yes, this is a big topic at the moment. Can you walk through your thoughts on when this happens? Other than wash rules, what other changes will come?
In March of last year, the Biden administration issued an executive order asking all the departments of the government to coordinate via the Treasury Department on a cohesive set of crypto recommendations. They came out in, I think, October with a set of recommendations. No surprise here. Most of it was about a central bank digital currency and some other vague statements. And then they asked for an extension until March of this year for stuff that we were really interested in as consumers: tax laws, SEC laws, these sorts of things. So we just have to hold our breath until then. That's going to come out, and then it's going to be in the form of law changes and official regulation changes. So these do not happen by caveat by the department heads. It actually gets approved by Congress, or it has a public comment period. The public can comment on it. It will remain to be seen. The problem we have ultimately, I think, with this area is the CBDC, because they don't want to treat that as a security. They want to treat it as fiat. And they don't want to do a lot of things. So they're really trying to draw a real fine line on something that is nothing more than a blockchain. Not that a blockchain is trivial, but it's just data on a imaginary field. Really splitting the hair here. I think we're ultimately going to end up in court adjudicating these things. The IRS fights tooth and nail to go to court, but we're taking cases to court. I have lawyers that I partner with, bringing other cases to court. We're going to beat them on these aggressive interpretations that the IRS has.
Amazing. Good question. Okay. Is it acceptable to treat adding and removing liquidity on Uniswap as taxable events? If yes, how do you determine the cost basis and fair market value of the asset you get for adding liquidity? Another popular question.
Well, I hope I understand this correctly, but if I am putting a coin out into a smart contract that's now being used as collateral in a liquidity pool, to the extent that I get my coins back, it's not taxable. To the extent I get other coins back, that could be taxable. When is it taxable is a good question. So typically, if I'm not mistaken, right, Liam, you put in like ETH and there's like a stable coin, like a DAI that you're being paired with, right? So right, and one's going up, the other's going down. So some people want to treat every day that happens as taxable events going up and down. I disagree with that interpretation. I understand the logic. It's a very simple logic. It's promoted by the crypto tax services because that's how their software works. That's not how the law works. In my opinion, it's not your ETH doing that. You've invested in what the IRS calls a financial instrument or contract for investment purposes. And it is. There's a smart contract anchoring this as well. So you put your money into an investment. Things are happening. Quantities are going up, quantities are going down. Not until I get stuff coming out of that investment do I actually experience gain or loss. So think of the liquidity pool as a box. All right. You're not taxed on what's happening in the box. What you put into the box is basis. What comes out of it is income or a return of your equity investment. So if I put in 10 ETH and equivalent amount of DAI, and then I get back 9 ETH, all right, I had a net loss of 1 ETH. Okay, that's how I look at it. And of course, I'm probably getting more DAI at that situation. And, and that would be the excess DAI is now income. It's not a capital gain because I didn't have those to begin with. So it's treated as income. Income's taxed at the ordinary tax rates. Good question. It's a lot of subtlety. And again, these crypto tax services usually recommend in their tax guides things that their software does. I don't necessarily agree with a lot of what's in there. They take the easy road because their software doesn't support it and they don't want to make it complicated. Give us a call.
Yeah, good to make your own notes. If you are going to start dabbling in DeFi areas, to make some notes on cost bases, because what you're saying is the softwares can get all confused and you may be paying a whole lot of income that it's not actually technically income. Okay, so how do we record losses from bankrupt exchange like FTX?
If it was simply a
great.
matter of it being bankrupt, we can't claim a loss because the coins are still your coins. You've filed a petition for them and you're waiting for a judge to make a decision. They're in limbo, might be in limbo for a few years. That's bankruptcy. You can't do anything with bankruptcy. But with FTX, for example, the promoter of this investment, FTX, Sam Bankman-Fried, has been the subject of a criminal indictment. Now that opens up the Bernie Madoff procedure, which now I can claim 75% of what I've lost this year. All right. The reason it's 75% is because you may get some money back and you reconcile it later. But the neat thing about this, you can itemize this deduction. So let's say you had $100,000 in FTX and whatever coins it got lost. You can claim the Madoff procedure on it while it's still in bankruptcy. And this year, you can itemize as a deduction $100,000. You could reduce your taxable income by that $100,000. So that's really, really big. It's much better than the $3,000 limit you have on a capital loss. That's why it's a really exciting thing. It gives you relief in the year when you had the loss. So for something like BlockFi, you could do the same thing. Celsius, Voyager, possibly. Do Kwon says that Sam Bankman-Fried was behind the collapse of the Luna, the UST. So remains to be seen. Could claim it this year, and maybe if it doesn't happen, then you just make an adjustment and bring it back. But there's a lot that can be done in this space this year. This is really the most exciting parts of the crypto tax code this year.
Yeah, absolutely incredible. I'm currently watching Madoff on Netflix at the moment, the Bernie Madoff scandal. So it's incredible. It's like we're seeing, Bernie Madoff 2.0. So, maybe there's going to be, there has to be a movie written about this or a documentary, to come in the years.
Oh, yeah.
Incredible. Oh, yeah. It's mind-boggling. Jess asks, Bitcoin layer 2 companies pay small sats for actions. Example, earn 10 sats to listen, spend 10 sats to tip, burdensome to track. What does the IRS really need?
It's a real hassle, right? You have a real hassle tracking all this stuff. Of course, these software products, crypto tax gain software, it works. They track it all. But ultimately, these are all trivial amounts. And the IRS auditors, they look for the big numbers. They're looking at a spreadsheet. They don't even look at the transaction fees. They're looking at the big dollar amount movements. So yeah, I mean, it's like a little bit of a nuisance, but you have it there.
Okay, let's see. Maybe we'll go for one more question. Which tax accounting software for crypto are the best?
I mean, a lot of these sites will promote ease of use. It's so easy to plug in your data. Is that the definition of best?
Mm-hmm.
Or are you looking for like an accurate number? You read these websites. The one thing none of them say is that they're accurate.
Yeah.
You look in the terms and conditions on these crypto tax calculation services. In the terms and conditions, they, in so many words, specifically disavow any claim or representation to being accurate. None of these services will defend you if you're audited. They might give you some assistance, like they'll give you a backup file or something, but no, they won't be there. You're on your own. So what do you mean by best? It depends on your perspective. There are certain services that generate low numbers more often than high. There are certain services that generate higher gain numbers than low. So I don't know which one is correct. In an audit, I don't have to prove that your number's correct. I just have to prove that the IRS calculation is wrong. And of course, they're using one of these services too. So they got the same proof problem that you have. Here's what happens. I mean, when you run it in, remember I told you about the total proceeds. One comes in very low, another one comes in total high.
Yeah.
Now, you then have to, how do you put it this way? Certain services, when you load in your transaction and you're moving from one wallet to another wallet, If they don't see that link internally, that it's just not jiving for them, they can't work out the time zones, certain services will say these are non-taxable. They'll wait for you to tell them they're taxable, right? And that service is going to give you a lower result. Other services will say, if we can't make the connection, then it was a taxable transfer in and a taxable transfer out, and the amount of income that you're going to have to report is going to be much higher. With those services, you have to work really hard to get those false income events down. You have to unmark them as being taxable. So they all have different perspectives. You don't know how these things work. You're just a Sunday user. You use it once a year. It's easy to use. You read the help. They seem nice when you talk to them on chat. That doesn't make it accurate.
So you really need to be keeping your own track on what you're buying, what you're selling, and really go through it with a fine-tooth comb and not just say, hey, this accepts my MetaMask. Oh, brilliant. It accepts my Coinbase CSV file. It must be accurate. It spits out a number. So you really need to have your wits about you.
So we do high-end gain calculation for people. We've never turned anyone away. We use roughly 3 different tools. I'll just be honest to this last guy. We use 3 of them. The right tool for the right situation. And a good craftsman never complains about his tools. We put the craftsmanship in, our financial analysts. We have a methodology. We work it religiously. We review, we document, we get people to much better numbers than they typically do by themselves, and we can justify it. We know what we're doing. We actually typically have level 2 support into these services. We had one service, they were loading all the buys in as sells and all the sells in as buys, and the data was all jumbled. We're like the first one to find out about it because their import routine broke. We called them up and we got it fixed. But you might struggle as a user not understanding where this data came from. It's wrong. That's the problem. Hey, it's been super exciting. Go to our website if you want any help. Taxes are sexy, and I'm glad you guys listened to all our podcasts.
You have to get that in there. Taxes are sexy. I love it.
All my best to everyone. 2023 is going to be a great year.
Trade well, my friends.
Bye-bye.
Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.